Hi traders, welcome back to another weekly workshop. So this workshop, I'm going to talk about a very simple quote by Jesse Livermore. I believe if you are an aspiring trader, you must know who is Jesse Livermore, one of the legendary trader, and he has made tons of money in the market. And there's one time he once said, money is made by sitting, not trading. So what does it mean? I'll repeat it again. Money is made by sitting, not trading. So it took me quite some time to really understand what is he really trying to say, because when I first started trading, I was thinking, if I don't trade, how can I make money? Right? If you're looking to make money, you need to take action, right? You need to take a trade. But the key point here is, are you taking high quality trade or not? If you're constantly taking substandard trade, if you're constantly involved in trades that you're not supposed to get into, you're overtrading, you're revenge trading, you're overthinking, you're overreacting, therefore you can never make consistent profits, right? So I'll give you an example here. So I'll use my yesterday's trade as an example to today's workshop. So going into the chart, you can see that on the early London session, I actually took a loss on the dollar yen. I was anticipating that since we get that strong sell off, and where is the origin of the market structure shift is actually here, I was predicting or expecting that the market wouldn't go above this 144.62 and revisit that high. So arguably you can say that I should have my stops placed above that high. Yes, the answer is yes. I wouldn't try to deny it, I wouldn't try to avoid it, but I should have placed my stops above the high. But I didn't do it. Why? It was because I was very confident that price wouldn't go beyond the structure if my thought process, if my setup is correct. But in this case, what happened? Price indeed just spiked me out by a little bit, and then it started rolling down. Not a big profit, but I'm fine. Right after I get a stop down on this position, did you see me immediately jump onto the second position? I don't. Do I immediately jump onto another short at that previous high? I never. It was because I noticed that if I jump onto the second trade, regardless of what happenings afterwards, if let's say I take this trade and I get stopped out, and I take a second re-entry at 144.80 and I get stopped out again, that would really affect my emotions. And what I care about is my mental capital. I don't care about if I can earn money from this trade or not, but I noticed that, and I acknowledge that if I take on the second re-entry on this trade, what if market continues to chop towards the upside? Can you see how choppy it is? What if I get stopped out on the second re-entry? What should I do? I start thinking about all these questions, and that's the main reason why I chose to say, hey, let's not take dollar yen. Let's start, since I'm so confident in the dollar weakness, why not I start looking at other pairs like dollar CAD, dollar Swiss? Maybe those pairs are a lot clearer. Maybe because dollar yen is choppy because of the confusion between dollar index and the yen index. Therefore, I went on to dollar Canadian and I start looking for confirmation. When I first switched on to dollar Canadian, everything was so much clearer. I got the clarity that I want. I saw price pulls back very deep. If you look at the 15-minute time frame, we have a strong sell off. This sell off, what happened? We get a break of market structure. When price does this break, if you go back to the strategies workbook, I did talk about inside structure continuation as well, ISC formation. When price breaks below this structure and it comes back up, don't think that this is a fake out, because this breakout is not a fake out. What is a fake out? If price starts reversing from here and does this, that is a fake out because of the speed that it reversed, because of the short duration that it reversed. But at this point, what happened? Price stayed below this support structure a very long time. That tells you that sellers are in control, therefore you should be looking for continuation. And if we go back to our trade call for the past 2 days, I talked about possible continuation here. Look at what price did. It retraces exactly back to 62% retracement. Then we continue. So I was looking on the dollar Canadian and I saw that, alright, since price moved away from the 62 level retracement, that tells me that our intention is still towards the downside. That's why I remain bearish bias on the dollar index. Therefore, I'm looking short dollar CAD, dollar yen, dollar Swiss, all of this. For me, tick off the list, I can short. When it first started running off, I thought that maybe I missed out the trade. The moment when I see pullback coming in, where's my point of interest? My point of interest is exactly somewhere around this zone here. Why? Is because here we get a breakout structure. This is not a real structure. Why? Because we don't have any proven key support. Is this a key support? No, it's just tiny little bit of consolidation. Here we have support and resistance. That's why I was looking for price to pull back towards 137.21, and I was being very lucky. Price indeed just tapped my entry, my sell limit entry, and then it started moving down towards my target. My target is at the previous swing low, and that completes a 4R. Then right after I took off this position, did you see me jump onto a second trade very fast? No. It's because I understand that once I get a winning trade, I need to take things a little bit slower. It doesn't mean every time you take out a win, you need to take on a second trade, third trade. It doesn't work that way. Sometimes when you take a win, especially after a series of winning streaks, you need to take a step back. You need to slow down a little bit. Market is probability based. You will never ever be able to predict when is the losing streaks coming. That's why every time when I take a winning trade, I'm blessed, I feel grateful, I take a step back, and I tell myself I need to focus even more, put a lot more attention on the next trade. Because a lot of times the moment we get a winning trade, it affects our mind, it affects our behavior, and therefore you start thinking, I must be a champion. Yeah, I believe most of us have this feeling. Every time your worst losing streaks doesn't come from having a few losses in the beginning. It always comes after you have some bad trade. Make sense? I believe all of you have experienced this before. Me, myself as well. My worst losing streaks comes after I make some big profit. Always that case. Why? It's because you start overthinking, and because you start being overconfident, overthinking. You believe that you're at the top of the world. You know you have absolutely broken down the myth of the market. You can do whatever you want, and therefore you don't have your discipline, and therefore you start taking random trades. Therefore the losing streaks come, because if there's no process, if there's no discipline, if there's no rules, are you trading or are you gambling? Right? Therefore I took this trade and I didn't take any re-entry because I was concerned that price might does a reversal back up and then we might go back to the high. Because no matter what, when I took this short, I acknowledge that I'm taking at a level of not so good, in a sense of we still have a key resistance above, and therefore I don't mind taking all my profits here. And I want to see whether if it breaks below this swing low, then I can always join later. If it doesn't break, I'm happy to continue shorting at this high. I did not take that position as I was away from my desk. Then afterwards, I took my final trade on dollar Swiss. Basically the same thing as well. price is forming a strong sell-off. If you go back to yesterday's trade call, it was just perfect. I talked about waiting for a pullback to 0.9854. If you go back to yesterday's trade call, I clearly say that I'm looking short at 0.9854, and that happened. When I saw that first sell-off, second sell-off, I was convinced that this is a double top continuation pattern. We might not go back to the high anymore, and therefore what? I start looking for short entry below the high. So where can I short this? Here? Nope. Why is it no? Because there's no level, there's no structure. Okay. Here, maybe, but I think price might spike a little bit more because most people would take this as a flag continuation. When I saw that big candle coming in, I noticed one thing. Retail traders are getting trapped. They are being attracted to the buy side. You see price going up, and that's the big players' intention as well. When they're looking to heavy sell off the market, they always create some sort of false candle to attract retail traders to buy before the move down. But indeed it comes. Then I noticed that, alright, if price doesn't respect here, which I think is the 50% retracement, it probably will respect a deeper retracement somewhere between 62 and 786. Between this region is where I'm looking short. As you can see, I took my short position in the equilibrium, in the medium or in the middle of this retracement, and my stops above the 8886. So you can see recently I use a lot more Fibonacci. You'll notice that it's mainly because recently we finally get some sort of trending movement. Therefore Fibonacci really adds on another layer of confirmation. So I took the trade, my stop loss above. I'm actually having quite a tight stops here because I believe price wouldn't go back to the high. That's the first stop process. Second one, I think there's a little bit of structure here. So if I have my stops there, I think it should be relatively safe. And same thing, price tap my sell limit order, and then it runs into my target. Why didn't I have my target here or here? It's basically just because it's a little bit late here in Malaysia. By the time when I was taking this trade, it's already about 11 p.m. So I really would, I'm happy to just get out of the trade for 2.8R, then just call it a day. I still close out the day for around 6R in profit, which is very decent. So go back to our workshop. Through these three trades, through these three examples, you'll be able to see that trading is really not just about I need to constantly take action, I need to get into trade. For me, a good trade really comes from the thought process and the considerations and the patience that you put behind that particular trade. If today you're looking to take a specific setup, don't have the mindset of I'm looking to take this, either I'm right or wrong. No, you always need to have a backup plan. If let's say I take this trade, if my initial stops get triggered, I get stopped out for the first time, should I re-enter or not? Which was exactly what happened earlier. I took that first dollar yen short. Did I get into a re-entry? I didn't, because I have included, I've already put into perspective that dollar yen might get into the choppy market. That's the first thing. Second thing, if I get into the re-entry, am I mentally prepared for the second loss? The answer is no, therefore there's no trades being taken. Third thing, does it really worth it to spend all of my attention and all of my capital into dollar yen? What if there's a little bit of conflict between the correlation conflict between the dollar and the yen, right? Because both of them are considered what? Safe haven currency. They are basically just categorized into the same category. So there I jump onto other pairs to look for good trade. look for a good setup. So I hope this workshop really helps you, and it puts you into the mindset of, I want to be a better trader, not someone who's constantly chasing for position after position after position without having a clue of what's really happening in the market. All right? A lot of times, the market is not that choppy. What's choppy is our mindset, is our thinking. If you can simply take a step back and start noticing small little tips, small little hints that are given by the market through price action, through the chart, you will ultimately become a much better technical trader. Right? That's it for the workshop. Trade safe, take care, and I'll see you later.